Hi folks, good morning. Today I'll be talking about cache management, but before we get to cache management, as I said earlier, that all these configurations, the 15 key features which you would configure are all correlated. So that's how you build the mathematical model. So as a recap on my fund management, I was talking about you have say 100,000 as an example, and out of that 100,000 you're not taking any leverage. In Interactive Broker, when you say one, means you're using your own cash, which gives you the buying power. So now, having said that, you are also telling the Interactive Broker, I mean into the software, that you want to use the entire cash. You could also say something like, I'll come to the best practice later, but you could say that, okay, I will not use 20,000 from this $100,000. So for now, let's take it as a zero just to explain how it works. So now you have a buying power and available cash for investment, say at $100,000. So you take this $100,000 forward and come to cash management part of it. So this is where your 100,000 is, which is nothing but which is equal to your available cash. So going forward with the software, you can tell the algorithm that, okay, out of the cash which is available to me, which is 100,000, I want to put in 80% of it as an example, or you can say 70% of it. I want to use 70,000 of that cash. So now the because of the configurations as it drives you towards perfection, the same is happening with your cash utilization. As you continue getting into perfection where all your trades, probably 80 to 90% of your trades are successful, at that point you come and make your increase your cash utilization. So I'll come to the best practice little later. But say from the algorithm standpoint, you can tell the algorithm that, okay, I want to use 100% of that 70,000, which is right away $70,000 investment, to keep circulating. Remember, this is circulating. As soon as something settles, the cash is available to you. If you're using 60-second as a pulled interval, which is recommended, within the next 60 seconds, as soon as something is settling with a profit, you are having that cash available to you for the next investment. Say, for example, if you're investing $5,000 per stock and this gets settled, at that time, that $5,000 would be immediately available to you in the next pulled interval. It could be 60 seconds or 2 minutes or whatever it is. In other words, your cash will never sit idle. So that's one of the key points which I'm trying to make. The second way of configuring is, if you want, you can tell the algorithm that, okay, I want to use 20% of cash every day. So that means it's going to take 5 days to exhaust your 70,000. So you know what, there is a saying, right? You don't want to put all your eggs in one basket. So keeping that in mind, even if you have $70,000 cash, you're telling the algorithm that I want to use 20% every day. So it will go on giving you $20,000 every day to to get to $70,000. So if you take this as a mathematical calculation, so if this was say 80%, if I take this as 80%, you have $80,000 right now, and you're saying that I want to use 20% of it, means you're taking 4 days, 5 days to exhaust your 20%. So it could be that way, or you could set up in one shot. uh, I want to use 80%, 100% of my entire cash, which is I have allocated. The third way to do is, which I haven't tried, that if you want to put in 25% and you tell that the index is going over 25%. You can follow any index. You can follow S&P, you can follow London Stock Exchange if you're trading there. You can follow Dow Jones, whatever index you want to follow. If you tell the algorithm that, okay, if the index is going over 0.25%, say today, please allocate another 25% of the cash which is available. I haven't tried that, but if you want, you can even take that as a route. So the point I'm trying to make is when it comes back to the fund management, which I have explained, that everything boils down to your stocks, your success story in terms of the type of executions you are doing and all those stuff which I mentioned earlier. If you remember what I spoke is if your win to loss ratio is very good, 90 to 10 or 80 to 20 in that range, you start allocating more cash. That's one of the best practices. But initially, you might have a buying power from here, as I've said, that if you're not using a leverage, you have 100,000 cash, and it doesn't mean that you will be investing 100,000. You should not. What you should do as a best practice is you start allocating probably say 30%, and you decide that okay, I have 30% as a cash, and I'll come to allocation or investment per stock. Say for example you are investing say $10,000 per stock. In that case, you would be probably picking up three best stocks. Again, we'll come to that discussion later based on the timing of the market, based on the individual stock's performance and the available cash with you. You might be picking up three of those best stocks at that point of time. It is so crucial. Humans cannot do that. So my point is, as soon as you say you get into that sweet spot, which I spoke about in the fund management video. So once you get into that sweet spot, you invest 30% of it from your available cash, which is 30,000 per stock, say 10,000. You recovered that within, I mean, you come out with a profit within say 1 hour or 20 minutes or 30 minutes, whatever it is. Continue doing this. You continue doing this for a few days, I would say, so that you know that your stock selection and the execution is correct. This is crucial. As soon as you identify that, that point you can come back and increase the cash utilization to say 40%. So now you have got $40,000 to invest in one shot. If you want to, at 100% percentage basis, you are investing that entire $40,000. So the best practice is go very gradual. And as you proceed with your success story of 90 to 10% ratio, which I'm talking about here, if you come to this ratio, or even 80-20 or 70-25, and we'll come to that a little later as to how you do that mathematical plotting in terms of your returns versus the stop loss and all those things. We'll come to that later. But once you identify that you are getting the wins much higher than the chances of loss, or your performance is very good, at that point you gradually come back and gradually increase the utilization. So once you get into a success stories of repeated investments where 90% or 80% of the repeated investments which you're doing day after day is giving you a success story, at that point you start increasing this to say 60%. You use 60% of the entire cash. When you get into more perfection, it will take time, but when you get into more perfection, at that point you might let it at 100%, which will be utilizing the entire cash which you have as a power. Once you accomplish this, this will take, say you are making money, of course you'll be making a lot of money with this success story, but you let it run for 6 months. You see how you're performing for 6 months constantly. And once you do that, at that point, you can come back and utilize a little portion of your leverage. At that point, you might want to have, say, two. One is your own cash, so 25% leverage, which means gives you 200,000. Now you take that 200,000 as your buying power and you move on with that 200,000. But again, you can restrict yourself to, say, 75%. You don't want to use 200,000. You start using 50,000 from the margin loan and move on from there. So, but these techniques which I just mentioned, it is usable, applicable if you're very conservative, but sometimes it may also happen that the market is not going in the direction of what you are trying to expect, which is 0.25%. In that case, your cash utilization will not be used fully because it's also looking into the market where you are telling the algorithm to invest only 25% more if if the S&P is or whatever index you're following is more than that percentage of 25% for that day. So this can be effective, but you have to, if you want, you can try this route also, which I just explained, especially these two routes. But I have not done that. I did not do that. I used 100% of the cash when I got into the perfection of selecting the stocks at the right time, which is the sweet spot. So having the key features which I'm talking about is go very gradual with your available cash. As more and more trades are successful, you keep increasing it. That's the one of the tips for this, which again comes down to the list of stocks which you will be investing on. So it is a very important element that the list of stocks you maintain for that day or for that week, whatever it is, we'll come to that later on, is crucial. So you will probably have to figure out a lot on how you would like to strategize in qualifying or keeping the list of stocks available for the algorithm to look at. Uh, and we'll talk about it a lot more when that relevant YouTube is being prepared. So the third important thing is your goal. Your goal is to get 80 to 90% of your success stories. Out of 10 stocks, you should be successful in 8 of those. Once you get to that point, you will basically see that you will not have any issues in releasing more cash because your success story is already 80% or 90%. And as you release more cash, more stocks will get invested and more would be your success story. So that way you are controlling, as if I come back to the fund management part of it, you are controlling your risk tolerance, which is what I spoke about in that video. And as you master that skill of getting the right stocks, the right stocks at the right time, and trading with the sweet spots, which I'm talking about, at that point you can slow down and increase your cash utilization. So even if you have 100,000 in your portfolio, doesn't mean that you will be investing 100,000. Go very gradual. So maybe start with $10,000. Because it's there's no harm in having the money into your brokerage account, because in brokerage account with Interactive Broker you can get overnight interest also. So I would suggest keep it because you will be getting some interest which you may not be getting from the bank. So you're better off to keep that money with the broker account, but does not mean that you would be using it. So the algorithm will completely control your emotions and stopping new investments if your win to loss ratio is not as per expectation. So there is nothing to be worried about when it comes to these configurations, because these configurations will automatically stop it. You will put your brakes right away. At that point, you can go back and think that, okay, what type of a list I should maintain in order to get to the sweet spot at 90% ratio. And if you can master that, and I will give you a lot of tips and tricks, but you have to come up with your research to see that, okay, it is working. But once it works, once that whole technique works with the permutation and combinations of what I am talking about, at that point, you will notice that, okay, you are making a very decent return on investments, keeping your risks very controlled. At that point, when you decide that, okay, you know what, this is the best I can do, you lock it and you continue the same methodology every. If you're looking into certain way of looking at stocks or building up your list, you follow that, you continue doing that. But if you make a change in anything, as you this is when you go already into real trading with real money. But if you think of changing anything, changing your list or changing anything on your parameters of finding the sweet spots and all, do not try anything in real trading account. Open up another account, get another simulation account, try that technique out, and if that's giving you a better result than your current, then gradually move into that strategy. But as I said, do not make sudden changes into your real trading account once you are into real trading. Once everything is stable, you lock it, you move to real trading account, continue your making money from there as a passive income, but open up another simulated account or the same simulated account which you had before and try a new configuration if that's the case. But again, please do not do anything on any configuration changes when you are really live. All you can do is changes like increasing the cash utilization to say 100%. That's okay. Those type of things means what? You're just giving more cash, you're pumping more cash into the investment. But prior to that, you were holding it. Those type of things are okay when you have a very high success ratio, say 90 to 10 or 80 to 20 is a very high performance when it comes to finding the sweet spot and executing the orders at the right time. So having said that, I would expect both my viewers to look and hear very carefully as to what I spoke about in fund management and what I'm talking in cash management. You combine these two things, make your notes, and then you can identify what would be the best move for you. Of course, very important thing is your mindset. So you don't, if you want to take an aggressive approach, I don't think you should. You can do that by putting in right away 100%. But if I'm taking a very conservative approach, maybe I will start with 25,000. I have say 50,000 with me with the leverage, and I'm investing only on 5 stocks at a time of $10,000. Or I might be investing on 10 stocks of $5,000 each. But again, here also there is a lot of mathematical models which has to go in. What should be your optimum investment per stock, which I'll talk about in a later videos. But for now, most importantly, you understand that your list is crucial. Your gradual release of fund is very crucial. I have already spoken about how you start with point very low tolerance factor and get to the perfection first. Once you get to that perfection factor and you're perfect, maybe you can increase this to say 20%. I mean, sorry, point, say 0.25%. You're increasing your risk tolerance, and at the same time, you are also using your cash utilization to say 75% only when you get to perfection. That way, what happens is you are allowing the algorithm to take a little bit higher on the risk side, because if you keep the risk factor very low, the algorithm will reject you from new investments saying that the risk tolerance has exceeded. Of course, as you increase the number of stocks for investments, you have to give little bandwidth to increase your risk tolerance. And at the same time, you also have to increase your cash balance. So this was something which I explained earlier, but I will give you again another, I'll see if I can do this. See, remember I was talking about in fund management, that you're expecting a stock to go up, but it did not. It went down for a while and then it came up. The same maybe with the second stock. You expected it to go up, it went down, and then later it went up. So obviously here you're getting an indication that you're probably not entering at the sweet spot. It's crucial. So your concentration then should be focused in how do I identify the sweet spots so that as soon as I execute a trade, I'm heading in the north direction as expected. If you're going short, you're heading in the south direction as per your execution. So when this type of thing is happening, that you're going down, it is going to affect your risk tolerance percentage, which I told you. So if this would have gone up as expected, then even having a 0.10% or 0.25% on the risk tolerance is practically nothing. Of 100,000, you're only you're taking a risk of $250. So your net worth will always keep growing up instead of going down. So these are all mathematically plotted. So if you want your net worth to go up, there are few things you need to do is first get that list, get the sweet spot so that you are going in the direction of the trade which you want, and at the same time give little bit more bandwidth on your risk tolerance so that you can invest more stocks and come back to the cash management side and increase it say from 50 to 75 and get a little bit more extra cash available to you. So once all these three things are aligned and you're getting a result, at that point you give some extra percentage of cash utilization so that you can trade a little bit more. So with your success story of 90 to 10 or 80 to 2, you will be heading towards pretty decent passive income at that point of time. So having said that, I don't think I have anything more to address here when it comes to the combination of fund management and cash management. But in case if you have questions, feel free to ask me.